Thanks for tuning in to the Real Estate Today podcast. Right now we're going to talk about identifying properties in a 1031 exchange.
I'm Bob Nelson, real estate investment broker with Pacwest Real Estate Investments.
And I'm Marcia Edwards, residential broker with Windermere Real Estate. Last program, we dove into 1031 exchanges. This is how you can manage your investment portfolio in a successful way to land well at the end of a chain of successful investments. Would that be a quick summary, Bob?
It certainly would. My opportunity to sell one property, acquire another property, and not be forced to pay the capital gains tax either at the federal level or the state level, the tax-deferred exchange.
Now, we talked about like for like, that is real estate for real estate, that's an investment real estate specifically. We've also talked a little bit about exchanging even or up in value and equity. Let's talk a little more about the time frames required for a transaction to be successful.
From the moment that you sell the property you're getting rid of, going into the exchange with, you've got a period of 45 days to identify a limited number of properties that you would be willing to accept, and then you've got another 135 days after that to close the transaction. Don't ever try to get past the 45 days. The real rule should be try to close that sucker in the 45-day period. Once you're past the 45 days, you can't re-identify, de-identify in the event that you find out the one you're after doesn't work or somebody sold it to somebody else and all that other stuff.
Let's talk about the identification, not just the period of time, but what you can identify. You can identify more than what you're actually going to seek to purchase in the end?
Yep. I can identify, now there's three rules. I can identify either three properties of any given value, no limitation on value, but I cannot identify more than three. The second rule, you can identify as many properties as you would like, but the cumulative value of all those things that you identified cannot exceed twice the sale price of that which you sold. It's the 200% rule. So I could identify 10 properties, but they, when you add them all up, cannot exceed twice the value of that which I sold.
This is kind of like the game of Risk. There's so many rules that you need someone to coach you through the whole game.
Well, if you mess it up and you start down a process and waste time, it's a real train wreck. Well, you end up paying the tax. Well, I don't know if that's a train wreck to you or not. To me, it's a train wreck.
There's another time frame of 180 days available.
Well, yeah, you do have this 180 days, but the 45 days makes up the first part of it, the identification period. The 135 days after that to get it done, that's a 180-day period.
I'm Marcia Edwards, Windermere Real Estate.
I'm Bob Nelson, real estate investment broker with Pacwest Real Estate Investments. You can see more of that type of information on my website, 1031guru.com.